Hello, everyone. My guest today is Tracy Osborn. She is building and helping build the team at TinySeed. If it sounds familiar, it's because we recently had Einar on the program. Obviously, Einar and Rob created this, and we're going to learn all about how Tracy's playing an active role in the accelerator, if they call it an accelerator. Now, Tracy, you ready to take us to the top?
Yeah, absolutely.
Do you guys call yourself an accelerator?
We do. Yeah. We say that we're the first startup accelerator for bootstrappers. So that like adds in all the little niches that we're in, especially the bootstrapper part, which is very important.
And explain the breakdown. We're going to focus all on you today and sort of the how the machine actually works. But how do you, Rob, and Einar split roles?
So Rob is kind of like a lot of people know Rob Walling through MicroConf, through being a former founder of Drip, and he sold that to Lead Pages. So he's kind of like the visionary for TinySeed. Einar, former Y Combinator, he's the investing, fundraising math person. He has a PhD in mathematics. So he kind of really focuses on those parts of the business. And then I work on the day-to-day nitty-gritty parts of the accelerator. I also help out with applications. I'm the first review that every application, I review every application that comes in first. So they have to come through me first. And then I basically run the program. I work with the mentors. I work with the founders, kind of helping keep things running while Rob and Einar are looking at the big picture side of things.
Yep. So about 22 companies through the program so far, 10 in the 2019 cohort, I believe, 12 in the 2020 cohort. Explain to me like how the rhythm works and if those numbers are accurate.
Yeah, it's 13 actually. We kind of snuck one in at the end. So you're probably looking at our first press release before I went in and sneakily updated it over to 13 as we brought in Ruben Gamez of DocSketch.
Okay.
So repeat the question again. Sorry.
Yeah. So well, actually, let's go there. Why sneak in DocSketch? What'd you like about them?
Yeah, Ruben was actually a mentor in TinySeed, and he was, working on DocSketch. And it's funny, we've done this in our first batch as well. We had. Oh gosh, my brain is failing. But we had another mentor who joined the first batch about halfway. Oh, Derek Reimer, Rob's former co-founder at Drip, was working on something new. And so when we found out he's working on something new, we were like, hey, why don't you join TinySeed? So we had to remove him from the mentor list, add him into the 2019 batch. And then Ruben Gamez, the same thing. He's working on something really awesome. Rob was talking to him. He was like, this is a great fit. How about you join us in the 2020 batch? And so he didn't kind of went around the outside the application process, which is very not normal, but it's nice. It kind of shows the power of the community we have around us and the mentors we have around us because they're also building businesses as well.
Yep. So what is, there's people like you really never get celebrated. You make the engine run, but you're not, because by the way, you don't have to be like, that is Rob's role. And then Einar does like the math and the funding and like you and we all have our roles, but it's very valuable to understand sort of like how the thing actually works. So for you or someone in a role similar to yours at, say, another accelerator, what are like the metrics you're focused on? Is it like number of applications? Is it growth of MRR while they're in your program? Do they do another raise at the end of the program? Like what's the success metric?
Those first two are correct. They don't do a raise after the end of the program. The way that our funding is set up, because we say we're essentially accelerator and investment for bootstrappers, which does sound like a little bit, like, hey, those bootstrapper usually means you're not taking in money. So we wanted to give a way for people to get just enough money, and then they can continue bootstrapping afterwards. So they just get enough of a boost. But the docs are set up in the way that they can also raise money if they want, or they can sell their company. But we don't have any expectations of raising money afterwards. We did have a few in the 2019 batch who did raise money, but the majority decided to go back to being to just, not bringing on any more investors. In terms of other metrics, yes to number of applications. I won't say that that's not like the number of applications is a great number to go for, but we're also looking at quality. So we looked at our applications for 2019 and we looked at our applications for the 2020 batch. The number of applications actually went down for the 2020 batch, but order of magnitude more like higher quality applications. We refined a lot of our messaging, really emphasize the fact that we're looking for people who are building SaaS businesses, people who are, generally we're looking at B2B startups, people working on businesses to help other businesses. And we also are looking for people who have some sort of proof of concept, proof of the industry. So we don't want someone who's in the idea stage who hasn't been making any revenue. So we do look for some amount of revenue to prove that you have some need for the industry. And then, so for our applications, the second round, the number of those people that fit all of those criteria went way up, even though our overall applications went way down. So we consider that a success.
Can you break that down for me though,
yeah.
real quick? So in the second cohort, like how many total applications, and then how many do you think like fit your thing? And it was hard to get down to the 12 or 13.
We're going to be a little coy and not say the total amount of applications, but out of the 2019 and 2020 batches, we did have almost 1,600. So you can kind of like imagine where the breakdown is in that amount. Just because we don't want people to focus on those numbers, we just kind of been, focusing on that larger picture type of things.
We'll keep going down. So let's, again, if 1,600 was total and 2020 was a little lower, we could say maybe there was like 700-ish in 2020. But how many were like good fits out of the 700 or 800?
Okay, about 50% of the applications were people that we were interested in.
So this isn't easy.
This isn't easy. Oh no.
To trim, like how do you trim down from 350 that you think are good fits? How do you go from 350 to 12? That's not easy.
Yeah, we have like a tiered application, a tiered interview process. Starts out with me. I reach out to all the people, kind of like get some extra questions from them, get some extra answers. So I ask them more details about how much revenue they're coming in, where the revenue is coming from, some things that, I look at their application, see if there's any questions that I have. I take those answers and then I bring those to Rob and Einar. Rob and Einar then do calls with probably about 50% of the people I pass on based on my answers. And so we start narrowing it down from there.
How many is that? How many did you pass on usually out of 350?
It was like over 100.
Wow. Okay. So they're doing 100 calls.
Yeah. I did way more than 100. Rob and Einar probably did less than 100. I think they didn't talk to everybody, but they definitely did talk to a good group of people in both of those. And then it was just like, this is the process took a little bit longer. This is my first time doing this process because, I did a call, they did a call, we had some questions, we did a call again, kind of narrowed it down. And then we also had, once we gave offers, we also lose some people because of the due diligence process. Once we involve the lawyers and we look at the state of their docs and the state of how they formulated the business. And so then some people dropped out at that point, and then it brought down to those 12 initial acceptances. And then we had 13 when we brought in DocSketch.
For someone watching right now that's thinking about applying to your next batch, what's the biggest legal thing when you enter the legal phase of the discussion that founders forget about, but it usually ends up having them fall out of the funnel?
Ooh, that's a good question. In terms of falling out of the funnel, a lot of things are, I will say the thing that I saw most that people forget about is that when they work with independent contractors or employees, they need to have some sort of
work for hire, right?
There we go. Yeah. The PIAAs is like the proof of inventions assignment agreement. And that's something our lawyer was like, you need to have these documents for everyone you work with. And when you were like working with someone off of Upwork, when they're doing some designs for your company, you're not really thinking of those extra documents. And some people had to do a lot of legwork to then recontact these people they haven't talked to in like a year so they can have all this paperwork set up. In terms of things that would make things fall through, sometimes it's like just the back and forth of lawyers, sometimes scares off some people because they're like, whoa, this is a big deal. Our lawyer is now, I'm having to formulate all this or have to collect all this documentation. I have to work with my lawyer. The lawyer fees are racking up. So I will say that sometimes that does happen. There's like, you know what? I'm a bootstrapper. I'm already doing really well. I think I'm just going to continue to stay bootstrapping without going through TinySeed, which is totally fine. We don't want to push anyone to taking money when they don't want to have some money. They don't want to have that. They want to continue to stay independent. What else? I think those are the only things I can think of at the moment.
So fast forward, let's say I'm interviewing you again 5 years from now. What does TinySeed look like? Accelerators can go multiple paths. You can go raise a bunch more money, increase the cohort size. You could say, well, we'll go raise more money, keep the cohort size the same, but do more mature companies and put more money into each company. There's tons of different ways to cut the cake here. What does your cake look like 5 years from now?
Well, FYI, we're raising fund 2 right now. So if there's accredited investors listening to this, we are bringing on new investors at the moment. So we are raising fund 2, and we are looking to increase the number of companies that we work with.
Okay.
So we're, hopefully next year will be double. 5 years from now, we want to have a cohort in Europe. We want to have a cohort in Asia. We want to have multiple cohorts that are happening in the US. Right now, it's a year-long program. So we're looking at some cohorts are starting every 6 months. So we want to really increase the number of people we work with, not necessarily increase the stages where they are, because we're very set on this, this stage where it's, they've gone into product market fit, but they haven't gone to escape velocity. So they just need a little bit extra money and some mentorship to really take their company to the next level.
And just for people that didn't hear my earlier interview with Einar, explain that just the high level terms.
Which term which one did I miss?
Money into each company, typically the structure
the
typically.
Terms. I thought you meant what does it mean to be,
No,
what are the bootstrapping terms and whatnot. So we invest, now that you're going to test me because I can't remember all the numbers, but I want to say it's 140,000 per company. And there's extra money if you have multiple co-founders. We take usually, I believe, 10 to 12% of each company. Obviously, all these things are a little bit negotiable, but I will say that all these terms, it's going to be around that area. So if you're 10 to 12% does seem like a lot, and you want to negotiate down to 3%, that's not something we really can do. So those are around the areas we're looking at. And the other thing that is interesting about our model is that founders get a salary cap. So they get set to the salary of an engineer in their major city based on Glassdoor. So say 160,000, they'll have a salary cap. And if their company is doing super well and they want to get more money for themselves, they can issue dividends. And then that's how TinySeed also gets paid. So we're not revenue sharing, we're not profit sharing. But when you're doing well enough that you want to pay yourself more beyond that salary cap, that's when we get paid as well through dividends. So that's something that's a little interesting. We find that's the most friendly bootstrapper term that we could do. Because when it comes to revenue sharing, we want you to invest in revenue back in your company. We don't want to take any of that money out of it if you want to continue just investing 100% in your company. So that's something that's really interesting. And I want to see more accelerators and bootstrappers follow that model.
Yeah. And so the tricky part about that is obviously the founder is essentially capping their upside in terms of cash flow. They're basically saying, it's not capping, it's disincentivizing paying out dividends above that salary cap. And the couple founders that I've worked with that kind of said, hey, look at my term sheets. What do you think? And I'm I like the TinySeed crew. I know these guys, those are set off obviously Glassdoor, and, typically they're not in big cities, right? This is a great thing about your models. They don't have to be in San Francisco or New York. And those caps look more like $100,000, right? So, if it's going to take them 5 years to build sort of an enterprise size business where you get a good exit, it's essentially 5 years where they're locked in at that salary. And so the tricky thing, and the question I asked Einar, and I'm curious how you try and communicate this to founders at the start of the process, is he believes most of the returns are going to come from exits, not dividends.
Yeah.
Would you agree? I assume you probably agree with that. You're all on the same team. How do you communicate that to founders early on?
That always comes up in our initial interviews with the startups. And because it's such a new, the thing that makes it hard is that we are only 2 years in. So we haven't gotten to that 5-year mark where we have exits, where we have people giving out dividends. We're still in this little, this in-between area where we have this idea how things are going to go, but we haven't actually said, the number of companies that have gone to this exit events are, so-and-so, and the number of companies are paying out dividends are so-and-so. So, a lot of it's just trying to reassure them that we're going to be always on their side. That's another thing, is we don't allow for buyback of stock because we want to be long-term partners with them. And, 5 years from now, hopefully they've built this beautiful bootstrapped business that's working really well. And throughout that 5 years, they still have access to their mentors. They still have, even though their accelerator year is over, they're part of this TinySeed ecosystem, kind of like how Y Combinator does it, where there's this network of people that are in Y Combinator. Even after they've exited their startup or they shut down their startup, they're still part of this network of people, and they have connections and they have access to people that they wouldn't normally have access to, those mentors. They have more opportunities. And so that's something we're really trying to build in TinySeed, setting it up now so people are really close together and feel comfortable with each other. So it's not just about the money, and it's not just about, it always helps also, the the funding and everything that goes in, but it's also about the network and the connections and the mentors and everything like that. And I think that's what really helps people, decide to make that choice to join us.
Would you agree that the DNA of a bootstrap founder is usually not the DNA of like a Silicon Valley, New York sort of founder that's saying, I want to grow this thing big and sell for a lot of money one day?
Yeah, I completely agree with that. I mean, we don't want to push people to work nights and weekends and burnout and all that. And, and when you're doing a Silicon Valley startup, the investors want to know that you're going to be spending all your effort and time to making it go big really, really fast. Where we want to emphasize, and we try to set up the way that the accelerator program works, so that people can take it as slow as they want. We're still going to be there and watching the metrics and being accountability partners. We do, we have tracked their MRR, and there's a down months, we can go to them and say, hey, we see that you didn't grow as much as before. Is there any way that we can help out? But
what about the DNA? I guess the question though is about DNA, right? And the reason I'm asking is to Einar's point, where most of the returns of a fund are going to come from exits. You have to have founders that exit eventually, right? And now you could argue that you're patient capital, but what I struggle with this model is the DNA of founders like that I interview. These are ones that they say, I'm building this for the long term. Yeah. I'm building it so I never have to work into my life. I'm going to keep this for 100 years and pay dividends. I'm going to pass it to my kids. They're not thinking I'm going to build this even slower, not raise capital and sell it. Usually like sell and bootstrap don't go together, just like VC and bootstrap don't go together, but you have to have exits to keep building Tiny.
Yeah. And people are going to have exits. Mm-hmm. Look at like the way that the internet ecosystem works. Like, 5 years from now, what's going to be still viable? What has happened in that time? And so a lot of people want to build these bootstrap businesses, but there is going to be like a natural moment where I think they're going to have to look for those exits because the industry has evolved. So even if you want to build for the long term, like I think Rob would agree with this with Drip. He built Drip. He was very invested in Drip. I think he really loved working on it, but he sold the lead pages because the price was right and the timing is right. And it was the right choice for him. And I think if you talk to him when he started building Drip, I think that he would say that he wanted to build Drip for the long term. And that's something we see with our current founders. Quite a few people have already gotten some acquisition offers. And right now they're so early on that they can say, hey, not right now. Let's talk about it later. But a lot of them have, I think everyone will say that if the offer is good enough, that's still going to be something they'll consider. I think no matter what, if your business is doing super well, you're going to start getting these offers. And now hopefully throughout the growth of your business, and you can wait till that time is right. And I expect to have quite a few exits just because of the evolution of the industry and the fact that if the company is going to do well, they're going to get those offers.
Yeah. We'll have to see what happens. I mean, again, the DNA of founders that I talk to that are bootstrap, they do what they do because they love building the company. And a lot of times when they get the acquisition offers, they go, well, if I sold and I put $5 million in my bank, like net after taxes from this thing, I don't know what I would be doing with my life. So I'm just going to keep building the company. The thing is, that's usually like the Nathan Barry of the world, right? Where they can pay themselves significant dividends enough to split it with a TinySeed. So like there's a little bit of disincentive to just build a lifestyle business that pays you millions in dividends because you have to split it with, 10, 12% to TinySeed. So maybe that is what pushes people to ultimately sell. I just know most bootstrappers I talk to, they absolutely love what they're doing and they almost wouldn't sell for any price unless it was just something ridiculously insane.
Yeah, that's true. And I would love to do like a follow-up in 2 years and then see what happens in that time, right? We don't know what's going to happen with the business we work with, but in the short term, what we're looking at, we have a really great portfolio of startups that are working with us, really amazing founders. And even with COVID, we're really lucky that the majority of them are doing well. Some people are doing really well because of COVID, because there's a few podcasting and things that are doing like really awesomely right now because everyone's jumping into podcasting because of COVID. So we're in a really good place. And I think, we're continuing to do this fundraising. Like I said, we're raising for Fund 2. Fund 2 fundraising is going pretty well. I won't say any numbers. I think that right now in the short term, we're doing really well. And I really look forward to seeing what happens in 2 years because you bring up some good points, but I have some faith that it's going to work out.
Yeah, Einar shared when he came on, just a summary, $4.5 million raised for Fund 1 in January 2019. into 23 companies across those two cohorts. I asked him about the markups, the paper markups he's going to use to go try and sell fund two. And he said 3 companies have raised traditional VC, leading to essentially a 55% IRR. But again, it's paper markup only. There's been no cash payouts. There's no DPI yet. And no companies have paid out dividends yet because you guys are still early, 2 years in. He said raising fund two now, targeting $35 million, pitching a 20 to 30% IRR, driven 80% by portfolio exits and 20% of dividends of portfolio founders over time. Just in case you guys want to go listen to Einar's interview on how he's thinking about the fund. But Tracy is everything about what to do with the money once they get it. Which companies come into the top of the funnel? Who moves along the process? Tracy, when's the next time people can apply?
We're going to say fall. Our last application was November. I will say that it's probably likely going to be later in November because we're shortening our application process. So there's a chance that it might be January. But basically, start paying attention in October. We're going to start releasing updates about when that's going to be starting in September or October. Applications are going to be somewhere between November and January, with the next cohort starting in April.
And is TinySeed.com the best place to pay attention for those updates?
Yep.
All right.
Totally.
Tracy Osborn, thanks for taking us to the top.
All right. Thanks for having me.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company, or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them, and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.